Hey everyone, my name is Clifton Saunders. I'm the branch manager here at Amcap Mortgage, and I would like to thank you for coming to my video blog. Today, we're going to be discussing topics on what it takes to apply for a mortgage loan. All right, today we're discussing what it takes to apply for a mortgage. There's three main things that you need to remember, and it kind of goes hand in hand with applying for a mortgage. I like to say the banks like to go CIA on you when you're trying to qualify for a mortgage loan. And the CIA in our category stands for credit, income, and assets. So today we're going to talk about those three main things. All right, the first thing is credit, for the C in the CIA. Now, credit's very important. Credit is going to determine if you qualify for a loan or not. So the first step is getting credit qualified. That just means, hey, my credit's good. And a lot of times people confuse that with a full qualification. That's just telling you that your credit is good. But we also need to verify that you make enough money and you have enough funds to close, which we're going to talk about momentarily. But credit, generally when people come into my office, we either say they're either credit approved or credit denied. Now, when you're credit approved, that just means that your scores are high enough to qualify for a mortgage loan, and which is great. That means you move on to step 2. If you're not credit approved, you're credit denied, which means, hey, your credit scores are not quite where they need to be. Well, we've got many avenues to help you boost that, but we will talk about that on another video. So now that you're credit approved, what's next? All right, now that we're on to part 2, we talk about income. So we've got you credit approved, but now the next question is, how much house do I qualify for? Well, in order to know that, we need to analyze all your different forms of income that you have. And keep in mind, we can't use money that you make on the side of the road that you collect in cash. We have to have income from verifiable sources. So we're going to go ahead and kind of talk about the different types of income we can use. First off, if you have a job, we can use that. So we're going to use your regular W-2 income that you can use qualifying. And typically, you just have to have a 2-year work history, and we're going to use your current salary in order to qualify you. The second type of income that we generally use is going to be if you're self-employed. Now, if you're self-employed and you've had a business for the last 2 years, typically we're going to use your last 2 years of your tax returns, which includes, 1099s. If you write off stuff, that can affect you. So be very careful when you're doing that. I get a lot of self-employed people who have great credit, and they bring me their tax returns, said they make $100,000, but after all the write-offs, what I see on their tax return is only $5,000 net, which can cause a problem. So make sure you file your taxes properly. Then, of course, there's people who have a lot of job jumpings, like we see people that have unemployment, or they work at the factories and things like that where they have multiple jobs. Don't worry about that at all. I've had a person that we got him into a home when he had 22 jobs over a 2-year time frame. So jumping around from job to job is okay, so long as we can document what your current pay is, and you do need to stay put while you're doing the mortgage process. And on some occasions, we can count some of the unemployment income if it's consistent, but rarely, so it's something that we do look at. The next step is if I got Social Security or disability income. I've had many people say, well, I'm on Social Security, so I can't qualify for a house. And that's not completely accurate. So long as that you're getting income that is stable and likely to continue for the next 3 years, that could be Social Security disability, that could be a pension fund. So long as we have proof that you've been receiving it for the last 3 months and it's likely to continue for 3 years, we'll be able to use that. And last in the income category is sometimes child support and alimony. We can actually even use that to qualify you. I've had a person where they use just completely qualified Social Security and child support. Now, child support is real important that the child that you're claiming it on must still be receiving it for at least 3 more years. So if you got a 17-year-old that you're still getting child support on, we may not be able to use that income because it normally cuts off at 18. But if you've been receiving it and it's likely to continue for 3 years, we can use that income. And then once we total up all your total income from all your sources, that's going to tell us how much money you make, and then minus how much debt, then we can tell you exactly how much you qualify for. And then we go into stage 3. All right, now we're on to stage 3. We've checked credit, credit's great. We've reviewed your income, and that's awesome. And the next thing is assets. There's a common myth out there that you need 20% for down payment, and that's not accurate. However, you do generally will have to have some kind of down payment or closing cost money available. In many cases, that can come in a factor of ways to reduce your cash to close. Typical loans start off at about 3% down conventional, 3.5% down FHA. Unless you're a veteran or buying in the USA area, you can get in with no money down. So, but hey, where does my money come from? The types of assets we can use is it can be a gift from a family member, Of course, money that you saved up on your own. You're allowed to pull money as a withdrawal or a loan from your 401k. And if you're buying from a family member, we've done a thing many a times. It's called a gift of equity because the house that you're buying from them. And then, of course, last but not least, is if you're a first-time home buyer, you may qualify for down payment assistance or tax credits. So we look at all those avenues to find a way to cover your gap of down payment. So once we know what your credit is, how much you qualify for is, we can calculate how much you need, and then we help you come up with all those things. And then once those things are all settled, that's when you become fully approved. All right, well, thank you for watching my video blog. As always, if you have any questions or concerns, feel free to reach out to me at any time. If you know anybody who can use my services, you can click the link that says refer a friend or family members. And please share this on your social media if you think it can help any of your friends out there who's looking to get qualified for a loan. So thanks again, everyone. Have a blessed day, and we'll talk to you later.